Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories within corporate filings. And today we are diving into X.O.M.A Royalty Corporation, S latest 8K report. And let me tell you, this one involves some interesting moves to potentially bring in some serious cash. Now stick around because we're about to break down how X.O.M.A plans to fuel its growth by tapping into the public markets with some pretty significant sales agreements. Don't forget, if you like getting these corporate insights without the jargon, make sure you are subscribed and join our Discord community linked in the description below. So, what is the big news on October 3rd, 2025? Well, X.O.M.A Royalty Corporation, a company focused on acquiring royalty and milestone revenue streams, has inked not one, but two important deals. Think of these as ways for the company to get a financial boost by selling off some of its stock. First up, they've got a common stock sales agreement with Leerink Partners LLC. This agreement allows X.O.M.A to sell up to a whopping $75 million worth of its common stock. This is a single big sale, mind you. It is an at-the-market offering, meaning they can sell shares gradually whenever it makes sense for them directly on the Nasdaq or any other trading market. Leerink will act as their sales agent, basically their go-getter to find buyers for these shares. X.O.M.A is obligated to sell any specific amount. They can pause or even end the agreement if they need to. The plan for the money is pretty straightforward: to buy more royalty and milestone revenue streams, which is their core business, and for general company needs. For every share sold through Leerink, X.O.M.A will pay a commission up to 3% of the money made from that sale. But that is not all. They also have a preferred stock sales agreement with H.C. Wainwright and Company LLC. This one is for up to $50 million worth of their depositary shares. Now, these depositary shares represent a piece of their preferred stock, specifically the 8.375% Series B cumulative perpetual preferred stock. This is another at-the-market offering similar to the common stock deal. Wainwright will be the sales agent here, and the money raised from selling these preferred shares will go towards funding future dividends, which is a big deal for preferred stockholders. And then any remaining cash will also be used to acquire more royalty and milestone revenue streams, along with working capital and other corporate purposes. Just like the common stock deal, there is a commission for Wainwright, also up to 3% of the gross proceeds from each sale. These deals are all registered with the SEC under a Form S-3 registration statement from earlier in the year. This just means they've done all the necessary paperwork to legally sell these shares to the public. The company has also gotten legal blessings from Brownstein Hyatt Farber Schreck LLP and Gibson Dunn and Crutcher LLP, confirming the validity of the shares they plan to sell. Now, when we look at these agreements, what we're seeing is a strategy to stay liquid and fund future growth. X.O.M.A Royalty Corporation isn't sitting on its hands. It is actively looking for ways to raise capital to expand its portfolio of revenue streams. This is a common strategy for companies in their industry, where acquiring assets is key to increasing revenue and profitability. The fact that they're resetting up these at the market facilities means they have flexibility. They can raise money relatively quickly if an attractive acquisition opportunity pops up, or if they just need more working capital. The commissions are standard for these types of agreements, and the company has assured all the legal housekeeping is done, which builds confidence for investors. Looking at the bigger picture, X.O.M.A is essentially using its stock as a tool to buy more assets that will generate income. It is like a baker using some of their initial profits to buy more flour and eggs, so they can bake even more bread and make even more money. The key for them will be how effectively they can deploy this capital. Will the new royalty and milestone streams they acquire perform as well as expected? That is the million-dollar question, or in this case, potentially the $125 million question, given the total potential under these agreements. The main risk here is that if the company S stock price were to fall significantly, these agreements would become less attractive or even unusable as efficient fundraising tools. Also, the success of their strategy hinges on their ability to identify and acquire good revenue streams at fair prices. If they overpay or acquire underperforming assets, the capital raised might not translate into the desired returns. In conclusion, X.O.M.A Royalty Corporation is executing a proactive capital raising strategy that gives them the flexibility to pursue growth opportunities. They essentially setting up a financial fuel tank to go out and acquire more lucrative royalty streams. The success of this plan will ultimately depend on smart acquisitions and continued market confidence in their business model. Alright, that is our breakdown of X.O.M.A. S latest filing. What is your take on these sales agreements and what they signal for the company? S future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.